Welcome to That Annuity Show, the podcast that will make you an expert in explaining annuities to your clients. Give us 30 minutes each week and we'll shave hours from your client presentations. Now, here's your host, Paul Tyler.
Hi, this is Paul Tyler, and welcome to another episode of That Annuity Show. And with me are my regular co-hosts, Will, Mark, and Ramsey. Good morning.
Good morning.
Morning. Great to be here.
Will, it's great to have you back. You've been absent for a little bit.
Absent, I would say taking some time to unplug at the end of the summer would be how I would characterize it. But good to be back and glad to join the show today.
Hey, excellent. And Ramsey, today's episode is a double click into Social Security. We've had some really interesting discussions leading up to this. And you brought a great guest to our show. Do you want to do the intros?
Absolutely. So today we've got a great opportunity to have Ahluwalia on the line with us today. I got that right, Ash?
Perfect.
Thank you. Look, Social Security is a very interesting and sensitive topic for everybody. I always like to say it's the first annuity everybody owns. And it's something that many people are concerned about. It's sort of all sort of socioeconomic strata. And what's been very interesting, and frankly, a lot of what I've learned from listening to Ash in recent weeks and months is just how little people know about what it has to offer them. And so we have this great opportunity today to learn more about how Ash got started in the business, and importantly, how many of the agents that listen to this program can incorporate Social Security advice into the scope of their business. So with that, Ash, tell us about what you do, and then tell us about how you got started focusing on Social Security.
Sure. Well, thanks, Ramsey, and thanks everybody. It's a pleasure to be here. I spent the last 30 years doing financial planning, and in particular retirement income planning. But the one area I didn't know that much about was Social Security. And I thought, it's just too important a part of my client's retirement plan to not do a deep dive on. So I started calling all the smart CPAs I know, all the smart tax attorneys I know, even other financial planners to see what they knew about Social Security. And guess what? They didn't know anything either. I thought, how is this possible? It's such a ubiquitous benefit, right? Everybody's got it, and there really don't seem to be any experts in it. So I thought, I'm going to become an expert. I'll take a weekend and learn it. Well, good luck with that, right? There's over 2,700 rules that govern Social Security. Most couples have over 500 possible filing options. So I ended up getting a couple of certifications in it, found sophisticated software, worked on hundreds and hundreds of plans. I've done probably over 2,000 plans. And because of that, I was named the National Social Security Advisor of the Year in 2016. That got me into the Wall Street Journal and Barron's and CNBC. But the point of this is, and I'm doing it from a perspective of a planner, I'm looking to attract really qualified clients to me, right? And the best way to do that, in my opinion, is to become a specialist and have a unique capability and to become referable. We take a lot of courses on how to ask for referrals, and I think it's sort of backwards. First, you have to become referable. If you can do that, you can. But who in the world would have thought that Social Security would be that expertise that would draw people to you? Because I mostly market through CPAs and attorneys, right? These are centers of influence. And when their clients call now and they say, well, we're 60 to 70, we're looking at our Social Security, should we file now, should we wait? And since they've seen me, they think, well, look, I'm not an expert in Social Security, but here's this guy, all right, call this guy. And so now I'm getting referrals that other advisors are missing out on. And these are fantastic prospects. They're in the sweet spot that I'm looking for, age 60 to 70, approaching retirement or in retirement. Because I charge a fee to do a plan, that sort of filters out the people that just have a few questions. These are people who want professional advice. And I think one of the mistake planners do when they look at Social Security, and I'm going to call them the dabblers. If you have some software and you're sort of dabbling in Social Security, don't have that expertise, you're probably going to solve for the strategy that pays you the most money. right? You would think that's why people would hire me. And, you know, now that I've done a couple of thousand plans, I can tell you that very rarely is the best strategy the one that pays the most. Because, right?
Yeah, that's really interesting, actually. And just to kind of,
Yep.
just make it super contemporary. Okay, COVID-19, a lot of people kind of, you know, and I think we've all gotten this, you know, friends of ours, you know, acquaintances are afraid of getting laid off. I'm assuming you're getting more calls today in the last 6 months on Social Security than you have in the last 12. Is that accurate or not?
Yeah, I'm getting a lot more calls because some people, you know, they've lost their jobs temporarily, permanently, whatever, but they're looking to supplement income. And they think, should I be drawing down on my retirement funds and defer the start of Social Security, let the benefit grow, or should I tap my Social Security now because I don't have earned income? Maybe I can file where I wouldn't otherwise file. Or they're just scared to death. They're seeing the deficit go through the roof. They're talking about the, you know, payroll tax deferral and all of that sort of thing. They're like, what if they run out of money? Maybe I better take it sooner. So it's raising a lot of questions. And I know that Ramsey mentioned earlier about, you know, guaranteed income, right? And pensions. Well, 90% of the population, they don't have pensions, but they all have a pension. They have Social Security. And they've never really thought of it that way, right? It's a guaranteed lifetime income stream. And typically it's not looked at in any kind of a deep dive. And when I teach my classes to CPAs and attorneys, and I say, by a show of hands, how many people in this room have a pension? No hands go up, and they should all go up. And when I ask them, how much do you think Social Security is going to pay a typical couple over their retirement? Who thinks they're going to get over $1 million? No hands go up. And a typical upper middle income couple will get about 1.4 million. Now, I have clients getting $2 million from Social Security, almost $100,000 a year from Social Security. And it's so far off the radar. It's stunning to me that nobody, you know, really looks at this.
I mean,
So
isn't
it's
that amazing?
area.
I mean, isn't that amazing, Ash, that like 1.4, 2 million, those are huge numbers. If any single person had an asset, like shares of Apple stock or Amazon or a house, any single asset that was sort of more obviously worth that much, they would treat it with kid gloves. So is this something you see a lot, that people just really
Yeah, I would say
the value?
For most people, right, Social Security is probably their largest retirement asset and they've never looked at it. And it's probably their only pension and they've never looked at it. And I don't know if you want me to go into this now, but even high net worth people, they're all over Social Security.
Tell us more about that, because that's one of the most surprising things that you've told me before, is that how high net worth people think about this particular benefit.
Yes. So when I get referred to a high net worth person, so let's say I'm talking a client between 20 to 100 million in net worth, and you think, why would a guy who's worth $100 million call me about Social Security? And I tell him, look, Warren Buffett collects Social Security, right? He's entitled to it. He collected it. So typically a high net worth person is probably talking to their accountant, and they're getting to that age where they can file, and they're thinking, do I really want to take it and pay taxes on it? Maybe I should just defer it, max it out at 70, and then take it. And that's the conventional thinking. And when the Wall Street Journal interviewed me, they asked me, what do typically high net worth people do? And I said, if they don't talk to me, here's what they do. They wait to 70, max it out, and then take it because their wealth manager told them, don't take it, you're just going to pay tax on it. You might as well max it out. You don't need the money. And I tell them, look, I tell them the exact opposite. Take it as soon as you can. So I'll just walk you through. In fact, this guy just called me. I'll tell you his story. So he's worth $40 million. He's in South Carolina. He calls me because his accountant said, call me before he does anything. So I do a Social Security plan. I said, here's how you can get the most money. And I have, you know, his wife filing, him collecting a spousal, deferring his, maxing it out at 70, taking it at 70. And I said, here's how you get the most money. And he said, wow, I would have missed that. I said, great. Now that I showed you this, I don't want you to do it. He says, why not? I said, because you're rich. He said, yeah. And I said, what's your biggest problem? Do you need more income? You don't need more income. Your biggest problem is state taxes. So here's what I want you to do. You and your spouse are, in this case, they were both 66. I said, take it now. And you'll get about 50 grand, pay the tax on it, you net about 35. take that $35,000, gift it into an insurance trust, right? An ILIT, and it'll buy about $2.5 million of life insurance. Now you have Social Security paying your estate tax, right? And we're converting that guaranteed income stream into 100% income and estate tax-free asset, and the government's paying for it, right? So for a high net worth person, maximizing Social Security income isn't the priority for that person. Maybe he doesn't, I have a surgeon in New York. He wanted to leave $2 million to his grandkids. I said, great, we'll get Social Security to pay for it. He said, how does that work? I said, we'll take the Social Security income, pay the tax on it. We'll buy a $2 million insurance policy in the trust. And now your grandkids are going to get $2 million guaranteed income and estate tax free, and Social Security is paying for it. Because otherwise he would take the Social Security income, pay income tax on it. It would sit in his estate, and then he'd pay estate taxes on it. And basically it's going in the garbage. So as a financial planner, it's not just about maximizing the Social Security lifetime income benefit. It's what's the smartest use of that cash flow in retirement. Maybe use it to fund long-term care insurance, right? It's just another income stream. It's just another retirement asset, but nobody really looks at it that way. And if you just plug and chug the numbers, if somebody had a software program that said, here's your benefit amount, let's assume life expectancy, whatever, 85, it would show you the maximum lifetime benefit amount. And I would tell you 99% of the time, my clients do not choose the strategy that pays the most, because it's rarely the best. In fact,
it's fascinating because I've heard many planners speak on this exact topic, and it's a canned response to like, wait as long as you can take it, wait as long as you can, then you'll get more money. Yeah. And they're not doing this level of analysis that you're talking and discussing. So that's one comment. And the other question I have is, we made a comment earlier about how you've got a room of people and you ask how many have a pension and none of them raise their hands because 90% of people don't. What happened? What's your opinion as to why people don't view Social Security in that light?
Well, you know what? If you think about it, up until you get close to retirement, you get like a Social Security statement. I mean, now you don't.
They stopped sending them out.
They stopped sending them, right? Until you're 60. They want you to go online and get it. But typically what would happen, once a year, you'd get the statement, you'd open it up, you see some number on the front, 2,000, 3,000, some number. You look inside and you think to yourself, geez, I hope it's there when I retire, and throw it in the garbage. That's the end of the planning. Nobody is doing a detailed analysis on what your optimal filing strategy should be. In fact, Social Security agents are prohibited from offering advice. And thank goodness, because half the time, they don't even know their own rules. I can't tell you how many times I have clients, I say, here's what you can do. Go in, file this way. And then Social Security says, oh, you can't do that. They changed the rules. And they're wrong. But I can actually get them the code sections so they get paid. So, I had a client, and I don't want to say that everybody's messed it up, but I had a guy who's worth $40 million. He's 73. He calls me. He says, my accountant said I should call you about Social Security. And I said, well, when did you file? He goes, I haven't filed yet. I said, why not? He said, well, I'm still working. I was told if you're still working, you can't collect. And his wife just turned 70. I said, you realize you and your spouse have missed $300,000 Social Security benefits so far. Now, the good news is he's worth 40 million, so it doesn't matter to him. It's not going to change his life. But my point is, if you're worth 40 million, you have the best accountants, the best tax attorneys, the best wealth managers, financial. How could that slip through the cracks?
Well,
people don't think of it as a valuable asset.
Interesting. And to your point, I think, if you think back to the old adage, if the only tool you have is in your toolbox is a hammer, every problem looks like a nail, right? Let's optimize for total income flow. Maybe just sort of take it down market a little bit. Look, I'm 62. Okay. I'm really worried. My company's having some challenges here. I might get laid off. Okay. In the next 3 months. Help me think through what I should be. How should I start thinking about retirement? Should it be entirely about deferring, taking income as long as I can? It sounds like your answer would not be necessarily that strategy. Maybe walk me through the conversation you'd have with someone to think through the nuances of Social Security strategy.
Yeah. So just to follow up on that, if you're 62 and you just lost your job or your business, you're not earning money. Okay, you do have to navigate the Social Security rules if you file early. If you file prior to full retirement age, you make more than $18,240, every $2 above that, they take back $1. So if I look at what his other assets are, right, because you got to look at it in the context of, well, what other money do you have? What are your expenses and all of that? But let's say he files because he really needs it. And I'm like, okay, let's start your Social Security now. You've got a approximately 25 to 30% reduced benefit permanently. But let's say he files because he has to, he needs the money, and a year later he gets a job. So he's like, oh, well, you know what? I'm making 6 figures again. I don't need my Social Security. I'll just turn it off. Well, you can't turn it off, right? You can only suspend your benefit once you get to full retirement age. However, because his earnings are so high, they're going to withhold all those checks from 63 to 66, let's say. 3 of those 4 years, they took his money. So what happens to that money? Does he get it back? Well, once he gets to full retirement age, they will recalculate his benefit as if he only filed 1 year early. So you could, I mean, I'm oversimplifying it, you could draw on your retirement assets, defer Social Security, or you could start Social Security at 62. And when you get to full retirement age, you can suspend it again and let it grow at 8% a year and turn it back on at 70. So you can coordinate between the different retirement assets. But that's what they need to look at is, you know, I might have 2 clients 62 and come up with entirely different recommendations because, you know, do they have other income? Do they have life insurance? Do they have other pensions? You know, what else do they have? So you really have to customize that strategy. And that's really what I sell. I tell people there is no canned solution. Everybody has a customized solution because everybody's situation is different. And even if they start their benefit, what if they have a health event? That can change things, right? So there's so many factors that play into it. But I don't think anybody really looks at Social Security that way. And they don't know the rules to really navigate it, you know, the way you need to.
Actually, are there like 3 main factors that you look at, you know, front line on it, like an individual's health, let's say, whether or not they have a pension? Like, are there 3 basic things that somebody should take into consideration as to whether they should turn?
Yeah, there's probably like a dozen. Okay. I mean, I look at their benefit amounts and I want to see, is there a way to maximize their benefit? So let's say they're a business owner couple and the husband's making 200 and the wife's making 20, right? But they're 60. Should he reallocate some of his earnings to her to increase her benefit amount? So I have to do analysis of that. Maybe we want to do that because you only pay Social Security tax up to $137,700, right? So he's making 200. He doesn't have to pay Social Security tax on that. On the other hand, I had a case where his wife had 38 credits. You need 40 credits to get a Social Security benefit, right? 10 years of earnings. I said, if we pay her $1,410 for 2 quarters, $2,800, she'll get a $500,000 pension. But her statement says, oh, she has no benefit. She hasn't qualified. It doesn't say, by the way, if you get 2 more credits of earnings, you can get a $500,000 pension, right? I mean, there's so many opportunities. So I look at that. I look at break-even analysis. How long does it take before you defer it? How long does it take for you to recoup what you could have already had? I would say when people say which strategy pays the most, I say that's an incomplete question. Which strategy pays the most when? Like over your lifetime? Which strategy pays the most at the beginning, right? So to me, the optimal strategies, I intentionally want to get less money, say in 25 years. If I plug and chug the numbers and I say, oh, by the way, if you both defer to 70, in 25 years, you'll get 80,000 more. Really? Who cares? What's 80,000 worth 25 years from now? What if you don't make it to 85? What if you do and Social Security doesn't, right? But what about, you could have already collected $110,000 by the time you would have got your first check at 70. What if you had invested that money, right? So you can't oversimplify. So to me, I coined a phrase that I'm looking for their Social Security sweet spot. I'm looking for that strategy that gets them the most amount of money up front without leaving too much money on the table down the road. But I kind of want to leave money on the table because I don't think you got to look at the net present value, right? One of the factors, Mark, you talked about what other factors? Well, what's the net present value of that cash flow? You got to risk affect those cash flows. and I don't mean just for life expectancy. Social Security is under enormous pressure. Change is afoot, right? Something's going to happen because they're going to run out of money. So what if they do simple things like push the full retirement age out? That can affect the trust fund and how long it lasts. But what if they cap cost of living or eliminate it, right? What if they means test Social Security? My clients say, Ash, would they ever means test Social Security? And I say, absolutely. I mean, they means test Medicare now, right? The higher earnings you have, the more you pay for your Medicare Part B premium. So you've got to look at the riskiness of those future cash flows. You may never get them. To go into a simplistic approach where you say which pays the most is almost certainly. I can tell you that of my 2,000 clients, I always ask it, if I didn't exist, what was your plan? And they'll tell me, well, we were probably going to do this. I have never had a client do what they were planning to do. You can always show them something that's a better fit for this situation. And I think it's too important to overlook. You know, it takes you 35 years, right? It's based on your highest 35 years of indexed earnings. 35 years to get your maximum eligible benefit amount. So if it took you 3.5 decades to get your benefit, why would you want to drop the ball on the 2-yard line and just wing it? Right? So I think sophisticated people will invest in a plan to do that. Yeah.
There's some very interesting things there. So one is, you talk about the fact that people don't know the PV. It's interesting because a lot of time we talk about this on this show, the importance of actually having, you know, the monthly value of an annuity represented as a result of the Secure Act. The fact that like people don't know what, you know, how much income they can get for a lump sum. And actually here it's the exact opposite problem. People don't really understand what the lump sum equivalent is. So that's one observation. Second observation that you brought up is that, you know, this is something that everybody has earned and is actually legitimately entitled to, having paid into it through, you know, their entire working lives. And yet you can't really look to the government to make sure that you get everything you're entitled to, because whether it's because of competence or authorization or whatever, you can't count on the person at Social Security to tell you exactly how to draw in the most optimal fashion. So both of those things are quite interesting. Now I want to take it back to something that, you know, back to where Paul was going with it, is like, well, what does this mean for, you know, all the agents, you know, on this call? So like, what can an agent do today to try and bridge the gap between where they are now and being able to have sort of a useful Social Security offering or a piece of advice that they can use to, one, help their clients, but two, also grow their business? Because the very important thing that you didn't mention quite yet is that when you do one of these Social Security reports, it involves fact finding. So you do all the fact finding for everything else you might do in insurance practice in the process of actually gathering data for this, for the Social Security report. So I guess tell us about how the 6,000 agents that tune into this, you know, how can they get started?
Yeah. Well, and I'm glad you brought up the fact finding point. It's so interesting to me that when somebody engages me to do a Social Security plan, I ask them everything and they tell me everything, where all their money is, what they have for insurance, send me their statements. Ash, what do you need to do my plan? Because they want me to find them the most money or find them the best plan. So it's unbelievable to me that people would just, through Social Security, tell you everything. So I think that's fantastic. From an agent, you know, I tell people 90% of our job is prospecting, quite frankly, right? I mean, all of the people that listen to your show could probably sell a prospect if they were in front of that prospect. They've got that skill set. But what's going to determine how well they do is how many people that they see. So you've got to come up with, I think, an area of expertise, something that makes you really referable, whether that's Medicare or Social Security or, you know, IRA planning or some kind of expertise that distinguishes you and makes you referable. So I think that's really important. Now you can learn Social Security just like I did. You can get certifications in it. The National Social Security Association, Google them. They teach courses. You can get a certification. You can invest in different software programs. You can do what I did. You can partner with other Social Security specialists, whether they're Sometimes they're in your advanced planning department, okay? But you want to let your clients know you're a resource to them for their planning and for people they know. Everybody, all of my clients who are 60 to 70 have friends who are 60 to 70 or colleagues, right? And after they finish a plan with me, I ask them, who else do you know who I can help? I mean, it's that simple. And they're like, it's not like referring somebody for a life insurance or an annuity or whatever, a product. You're selling, you're getting referred for an expertise that they can't get anywhere else. And I think that's really a driver for this. It is not as difficult a referral as it is if I just sold a client $1 million life insurance policy and I said, oh, by the way, who else do you know who needs life insurance? Good luck with that, right? So, but if you say, I just found you $300,000 that you would have missed in Social Security planning, they're like, you've got to talk to my sister or my colleague or, whoever. And the other thing, just while I'm thinking of it, because there's divorce benefits, spousal benefits, survivors benefits, children's benefits, I can't tell you how many couples I have who are in their 60s who have minor children, right? And now they're getting thousands and thousands of dollars in child benefits and child and care benefits that they would have missed. So there's all kinds of nooks and crannies in the Social Security system that if the professionals that, and again, I network with CPAs and attorneys because they're the trusted advisor. If a CPA says to the client, you need to call this guy, guess what? They're calling me and they're paying my fee, right? Because the CPA told them. Very powerful introduction. So if you become a resource to that CPA or attorney, they're happy to send clients to you if they know you're going to do a good job and provide the best advice. And now I've got them bird dogging clients for me all the time, right? I mean, that's the thing. So I would say that these professionals who listen to your show should either do some homework, reach out to me. I'll show you where you can get certifications in it, where you can learn it. Build an expertise. If you find this area interesting, build an expertise in it, or partner with somebody like me that you can now go to market with and become a resource to your clients.
Hey, Ash, a couple questions. I really appreciated your first a comment and then a question. I really appreciated your making that distinction between just leading with a product, but instead leading with a conversation and a value play that you bring to bear with your experience. Are you doing this nationwide? When you're doing your Social Security planning, are you just geographically centered in the Metro New York, New Jersey area? How do you offer that service nationwide?
Yeah, well, before COVID, I did a lot of live workshops. I felt that the best audience I could speak to were CPAs and attorneys. So I spoke at CPA firms, law firms, at the New Jersey Society of CPAs. I've spoken at their the New Jersey Convention a couple of times, the New Jersey Bar Association. But I've also spoken in Florida and Texas and other states where CPA firms that have offices in other states that, can you come down and speak to our firm? So the great thing about Social Security, it is a national, right? It's a federal program. So my clients are prospects all over the country. So the guy that just called me from South Carolina, I've never met him. I never will meet him. But he didn't call me to follow up on the Social Security. He called me about life insurance because he said, I'm going to be talking to my state tax attorney at 10:30. Just my luck, right? But I wanted to pick your brain again about how to use Social Security to leverage, for insurance for estate planning. That's one of the great things about it is that I've done national webinars and I've gotten calls from CPAs all over the country. But for the most part, my live speaking events and webinars are in the tri-state area.
All right, well, that is fantastic. So Paul, Will, Mark, any other questions or thoughts or comments?
I guess, Ash, just tell me, okay, you've sold me, I'm an insurance agent. I want to become an expert on Social Security. Find you, or I go back and I learn this myself. How long does it take? How long did it take you to get up to speed to the point where you could create a referable? I love your term. At what point were you referable? How many months? How many years? How many? time? How many meetings with clients does it take?
Well, it takes about 8 years. Okay, so don't let that scare you though. Here's the thing. I mean, that's to master it. Once you get your certification and once you identify a software program that you're comfortable with, and I have a couple that I recommend, most of those software companies have in-house technical experts. So when you have case studies, you can call them and say, here's what's going on. Did I get this right? Am I missing anything? So you do need like a back office of some kind where they can do a deep dive and research things for you. So you don't wait till you become an expert. You know, after my first 6 months, I was out doing plans and I was learning as I went. And I had, you know, over time you have fewer and fewer calls until you rarely ever get a call, right? I mean, I can pretty much figure out everything. But from time to time, I still call on those experts to go into the code and do a deep dive. So I think, but they're going to ask you, what makes you an expert, right? That's what I would ask them. Somebody called me and said, Ash, I was told that you're Social Security. Well, what makes you an expert? You know, I'm a certified financial planner. I have an MBA from Wharton Business School. I'm a CPA, but that doesn't make me a Social Security expert. At least the certification helps because now you can say, yeah, I'm certified in Social Security plan. You don't have to be the National Advisor of the Year like me. You just have to have a certification and say, here's what I do, and I'll do a deep dive on your plan, your particular situation, and go to town. So you can get resources through the software companies, I find.
A great idea. Will, Mark, any final questions here?
I guess, Ash, if you were to try to quantify, is there one that you would quantify like as the most common mistake that people make without seeking guidance?
Social Security planning, oh my gosh, they make so many mistakes. I mean, the biggest mistake is they don't think that they need to do any planning until they retire, right? And now, you know, if you're 66 or 68 and you retired, you could have missed tens of thousands of dollars in missed benefits, right? So I think the first thing is to get the radar up to say, you know, people associate Social Security as when I retire, that's when I file. Mm-hmm. You have to say, no, it's just like any other kind of retirement income planning. You got to do it before you turn 62, ideally, because that's the earliest either spouse could file in theory. But plan ahead. They don't think that there's anything they can do. They think that Social Security tells me what I get. They don't realize they have over 500 filing options, right? They don't realize there are ways to maximize benefits. They don't realize that they can collect off their former spouse or former deceased spouse or, you know, minor child. They don't know what they don't know. So the awareness is the biggest battle. They're all out there not knowing they should be doing the planning, which is why I teach classes to CPAs and attorneys, because I know once they know that when I finish my class, I tell them, look, if I did my job right today, you know less now than when I started, right? Because now you know just how much you don't know. So they don't even try to advise their clients. They just now refer it out. But if the CPA tells the client, look, you really should, before you file, do it, you know, get an analysis done. Make sure you're not leaving any money on the table. But somebody has to have that conversation with them, because the average person on the street wouldn't even think that there's anything to do.
So Ash, just to follow up on that and a final comment, this is it's astonishing to me that there's that many filing options and that there's that lack of focus by individuals on this really, really important asset. So how do we change that as a society so that folks are both aware and actively engaged with planning with regards to their Social Security decisions before retirement?
Well, I mean, there are a lot of articles in the press on Social Security, right? But it's a tough topic to go through technically in articles, right? You could do this, or you could do this, you could do this. You know, mostly where the focus right now is it going to run out of money and should I go take it, right? What's happening with the program? Am I going to lose my pension? It's that level. But to get into filing strategies, and again, I don't know the best way to communicate with the general public on it, because it's a very technical subject, which is why I've approached it through professionals like the CPAs and the attorneys, or other financial planners, quite frankly. They should be having this conversation. You think about all the wealth managers that manage millions of dollars for their client, right? Meanwhile, they've never looked at their Social Security, not in any professional way. And so if you don't educate planners and insurance advisors and other professionals, people are never going to know. They're just not.
Yes.
Yeah. Hey, well, listen, another, fascinating discussion on a topic that I think, Will, to your point, everybody thinks they know, but they really don't know. Mark, and gosh, certainly, how many errors can be made, how much, what kind of implications can this have? So I heard, really understand this topic, not when you're about to file, but, far in advance. Find an expert to help you if you're an advisor and or become one, but just realize you got to put a lot of time and energy into this. So Ash,
Can I just say one last thing before I close?
Absolutely.
Just to follow up on Ramsey's comment, is the great thing about the Social Security planning. Yes, it's a standalone service. You can help your client. But once you go through that fact finder, you're going to have, now you have the right, you've earned the right to have the annuity conversation with them about their investments, right? Or their overall wealth management and insurance planning and anything, because now you're a trusted advisor to them. But it came through the Social Security door. And I think it's so powerful to establish relationships and build credibility. And then you get to talk about all that other stuff.
Hey, listen, Ash, this was great. Thanks for coming on our show. Where's the best way for people to find you, talk to you, ask you for help?
Well, my email is Ash, A-S-H, at OneTeam Financial, and one is O-N-E, OneTeamFinancial.com. They can call me directly at 973-202-1212. I'd be happy to help any of these advisors if they have more questions.
Excellent. All right. Hey, well, thank you very much. And listen, send us questions, comments. You have ideas for shows, let us know. And tune in again next week for another episode of That Annuity Show. Thanks.
Everybody.
Thanks. Great show.
Thanks for listening. If you've enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more information at thatannuityshow.com.